Imagine standing at a gas station, watching the numbers on the pump climb past $5 a gallon, your wallet feeling lighter with every tick. Across the street, a trucker's arguing about delivery costs, and in the distance, factory smoke's thinning as production slows. This isn't a sci-fi flick. It's April 2025, and Saudi Arabia's latest oil move is hitting America like a freight train. Ever wonder how one country, half a world away, could rattle your life this much? Picture desert oil fields pumping furiously, Riyadh boardrooms buzzing with strategy, and global markets flashing red. Saudi Arabia's playing a dangerous game, and the U.S. economy's in the crosshairs. You ready to uncover what's really going down? Let S dive into a story that S got more twists than a thriller and stakes higher than ever. Oil's the world's heartbeat, fueling cars, homes, and entire economies. Saudi Arabia's the maestro, sitting on 260 billion barrels, 17% of global reserves, enough to drown cities if spilled. They lead OPEC+, a 23-nation cartel pumping 40% of the world's crude. When they shift gears, everyone feels it. Right now, they're flooring the gas, and it's not random. It's calculated. To get why, let's rewind. Back in 1973, Saudi-led OPEC embargoed oil to the U.S. over Israel support. Prices quadrupled, gas lines snaked for blocks, and inflation hit 11%. The economy shrank 2.5%, shedding 2 million jobs, says the Bureau of Economic Analysis. It showed oil's power, not just energy, but leverage. Jump to 1986. Saudi Arabia flooded markets to punish OPEC overproducers. Oil crashed to $10 a barrel, gutting Soviet fields and Texas rigs alike. 200,000 U.S. jobs gone, per the Dallas Fed. In 2014, they targeted U.S. shale, dropping prices from $115 to $30 by 2016. Shale firms collapsed, 100,000 workers hit the street, but Saudi Arabia burned $200 billion in reserves, per the IMF. They play hard, taking pain to deal more. Now in 2025, they're at it again, and the world's messier than ever. U.S. tariffs, 25% on Canada and Mexico, 145% on China, are sparking trade wars. The Dow's down 3,000 points since February, per Reuters, and inflation's at 3.5%. On April 3rd, OPEC+, with Saudi Arabia steering, stunned markets, hiking output by 401,000 barrels a day for May. Triple expectations, says Reuters. Brent crude sank 6% to $60, a four-year low. Then Aramco slashed Asian prices, cutting Arab light crude 2.30 to 1.20 above the Oman-Dubai benchmark, per CNBC. Why pump more when they need $91 a barrel to break even, per the IMF? Are they out to crush someone? U.S. shale's pumping 13.2 million barrels daily, 20% of global supply, but needs $50 to $60 to profit, says Wood Mackenzie. At $65, it's teetering. 30% of wells could shut, costing 50,000 jobs, per Rystad Energy. This isn't just about oil, it's your life. Gas at $3.50 could hit $4.50 if supply tightens, adding $1,000 yearly, says AOA. Groceries, up 6%, could climb higher, per the USDA. Jobs, if shale tanks, ripples hit trucking, retail, diners. Yale says tariffs plus low oil could cut GDP 1%, $270 billion. Saudi Arabia's got motives, punishing OPEC plus cheaters, eyeing shale, maybe flexing on U.S. tariffs. But what's their endgame, and can America dodge the blow? Hang on, because this is just the start. You're locked in, and I am stoked because we're diving into the meat of this Saudi Arabia oil saga. It is about to get intense. We've set the scene. Markets are shaking, oil's crashing below $65 a barrel, and Saudi Arabia's pumping like there's no tomorrow. Picture a global chessboard with Riyadh moving pieces that could sink U.S. shale, jack up your gas bill, and maybe spark a recession. Why are they doing this, and how hard will it hit? Let's rip into the numbers, the motives, and the chaos unfolding right now. You're going to see why this isn't just news. It's a wake-up call. Let's kick it off with Saudi Arabia's big swing. On April 3, 2025, OPEC Plus, with Saudi Arabia in the driver's seat, shocked everyone by boosting output by 401,000 barrels a day starting May, way past the 135,000 expected per Reuters. Then, Aramco slashed prices for Asia, dropping Arab Light crude to 30 to 120 above the Oman-Dubai benchmark, the biggest cut in over 2 years, says CNBC. Brent crude's now at 61.44, down 17% this year, a 4-year low. Saudi Arabia's pumping 9 million barrels daily, and with costs at $35 a barrel, they can afford to flood the market. But here's the rub: they need $91 to balance their budget, per the IMF. At $61, they're $50 billion in the red, yet they're still pushing. What's the deal? This hits the U.S. like a gut punch. Shale, pumping 13.2 million barrels a day, 20% of global supply, needs $50–60 to break even, says Wood Mackenzie. At $61 and falling, 30% of wells could shut, slashing 1 million barrels daily and costing 50,000 jobs in Texas and North Dakota, per Rystad Energy. That's $60 billion in losses for producers, says IHS Markit. But it's not just rigs. Low oil messes with everything. Energy investment drops $30 billion per $10 price fall, per the Baker Institute, slowing GDP. Gas prices? AWA says $3.50 now, but volatility could spike it to $4.50, adding $200 a year per household. Inflation's at 3.5% per the BLS, and this could push it to 4%, squeezing your groceries and rent. Saudi Arabia's got 3 plays here. First, they're cracking the whip on OPEC+. Kazakhstan and Iraq overproduced 1.2 million barrels daily, per the IEA, stealing share. Flooding the market forces them to heel. Saudi Arabia did it to Russia in 2020, tanking prices to $15. Second, they're gunning for U.S. shale. America's output jumped 40% since 2015, crowding Riyadh out. A price war could bankrupt 15% of shale firms, says Deloitte. Third, it's politics. U.S. tariffs, 25% on Canada, 145% on China, are crashing demand, with oil down 16% since April 2nd, per Reuters. Saudi Arabia's buddying up with China, who buys 25% of their oil, per OPEC, maybe to tweak the U. Yes, but they're bleeding too. Aramco's profits fell 20% to $110 billion in 2024, and they've raised $14.4 billion in bonds, per Bloomberg. Vision 2030's $1 trillion dreams. Neum, tech hubs, need oil cash. So why risk it? They're betting they can outlast everyone. Stick around because Part 3's got a twist that'll flip this whole story upside down. Here we are, the final lap, and trust me, this is where the ground shakes. We've seen Saudi Arabia flood the oil market, crash prices to $61 a barrel, and put U.S. shale on the ropes. You're probably wondering how much worse it can get, or if there's a way out. Picture a world where gas hits $5, your grocery bill stings, and America's grip on power slips. Saudi Arabia's got one last move, and it's a stunner that could change everything. Ready to see the end game? Let's jump in and unravel what's coming. The damage is real. Saudi Arabia's 401,000 barrel-a-day hike, with Aramco slashing prices, has Brent crude at 61.44, down 17% this year, per Reuters. U.S. shale's bleeding. 30% of wells could shut, costing 50,000 jobs and $60 billion, says Rystad Energy. Inflation's at 3.5%, gas at $3.50, and tariffs, 25% on Canada, 145% on China, are spiking costs per the BLS. Saudi Arabia's $50 billion short per the IMF, but they're not blinking. Why? Because this isn't just about oil. It's about rewriting alliances. Here's the bombshell. Saudi Arabia's pivoting to China and India, and it could cut the U.S. off at the knees. In April 2025, Saudi Arabia signed a deal to send China 200,000 more barrels daily, $5 billion a year, says Bloomberg. India's getting 400,000 barrels via Aramco's $15 billion refinery stake, per Reuters. Asia's 50% of global oil demand, per the IEA, and Saudi Arabia's leaning in hard. The U.S., down to 298,000 barrels daily from Saudi Arabia, a 22% drop from 2023, while China's up 10% per the EIA. Now add Canada's 500,000 barrel deal with China and Mexico's gas talks per Reuters. That's 1.3 million barrels, 20% of U.S. imports, $40 billion yearly, potentially rerouted. If Saudi Arabia shifts another 500,000 barrels east, America loses 25% of its crude. What's that mean? Gas hits $5, costing $150 billion annually, per AAA. Refineries stall, cutting output 10%, says the API. GDP drops 1.5%, $400 billion per Moody's. The dollar, tied to 60% of oil trades, wobbles. A 5% dip adds 1% inflation, says Goldman Sachs. Your life? $2,000 more for gas, 10% higher groceries, and 1.5 million jobs at risk, per the BLS. Saudi Arabia's cozying up to China's Belt and Road, $50 billion in deals, says Xinhua, while hosting Russia-Ukraine talks, per the World Economic Forum. U.S. influence, built on decades of oil pacts, fades. Saudi Arabia's winning share, 12% of global exports, up 5% to Asia, per OPEC, but losing cash with Aramco's profits down 20%, per Reuters. The U.S. could hit back. Sanctions on Iran's 3 million barrels or NOPEC's OPEC lawsuit, says the Eurasia Group. But the strategic petroleum reserves at 375 million barrels, just 60 days, per the DOE. A flood could drain it. Is this Saudi Arabia breaking a 70-year U.S. pact, or a bluff to force talks? Comment below. Can America dodge this? Hit subscribe. This isn't over. What happens when the world's oil king picks a new court? You tell me.